No one likes to lose, especially when it comes to money, though. But if you have investments in the market, this past few weeks have been really rough. So we turn to investment and retirement expert Corey Sickles with Safe Harbor for a little guidance. And Corey, it really just has kind of been that essential roller coaster when it comes to the markets, right?
Since September, I mean, it's really been a roller coaster. Since we hit that all-time high, I mean, the market's been down about 15%, since that point in time, and it's got a lot of investors worried, and it's something that you really need to start talking about for 2019.
So have you been a therapist for the past few weeks to your clients, part advisor?
There's definitely been a lot of different type of discussions with clients, but as long as, we'll talk about this in a little bit more detail, but as long as you're allocated the correct way and your entire portfolio is not experiencing the volatility in the market, in the long run, you're going to be better off.
Okay, so for your first visit of a new year, that's what you want to kind of stress, right? Especially a new year. Get started, kind of look and see where you're at. So two words we often hear when it comes to a portfolio, right? We hear allocation, as you mentioned, and diversification. First, are these two different things?
They are two different things. So allocation is more as what is my really true risk? And what I mean by that is what percentage do I have in stocks? What percentage do I have in bonds or maybe cash? So that's what allocation is. Diversification would be is how am I investing my money? Am I in large cap? Am I in small cap? Am I international? Am I U.S.? I could be 100% diversified, but I have 100% risk within the market because I have no safe money. So what you want to be able to do is make sure that you are diverse and you do have a good selection of investments, but you also want to make sure that your risk level is allocated the correct way so your entire portfolio doesn't experience the ups and downs of the market.
So let's talk about that risk tolerance then. How do you figure out your bar?
Yeah. So what we do is every year, when our clients come in and meet with us, we always reassess the risk. The way I always look at it is you're 1 year closer to retirement, and you want to make sure that your risk level is kind of following what your long-term goals are, because they could change year to year. So if you go to our website, we have a risk survey that you can take. It's 11 questions, and really what it's going to tell you is basically, am I a conservative investor? Am I a balanced investor? Or am I more growth oriented? And depending on where you are in your cycle, that's where your risk level is going to be. And the most important part about it is once you find out what your risk level is, then make sure that you allocate the correct way, for that.
And it's not just, we talk about obviously as you get closer to retirement, but I feel like even as you mentioned, in your life, things kind of ebb and flow. So you can probably even, go back and forth between how much you feel comfortable risking, right?
That's correct. And, I'll say this, if you're allocated the correct way and you have some safe money, then you can probably be a little bit more aggressive on what we do have invested in the marketplace for you. And that portion of it, if you're, here's the biggest part, is if you're allocated the correct way, I think long term you're not going to pull that plug that says sell. Basically what you're doing is you're selling low, and then you're not going to get back in a little bit later. But if you're allocated the correct way, the toughest thing to do sometimes is talk with someone like us that says, you know what, you need to stay where you are. We've lost some money on this portion of your assets, but we didn't lose it on your overall.
Okay.
And in the long term, the market always it always produces real returns for clients.
Okay, so know that. You have an offer too for a risk tolerance meeting. And part of the whole allure of that too is meeting face to face really does something, right? I mean, that is the way to do this.
It does, because if you go to our website and you check out your risk survey, do your risk tolerance online. When you do come in to meet with me, again, there is no cost. The meeting is complimentary. If you bring your statements, not only can we look at your overall portfolio and find out where you are, what's your allocation today, where are you diversified, and more importantly, does your risk level match where you are today?
Right.
And if it doesn't, then we can come back with some suggestions for you to make sure that it does, meet your, long-term goals.
All right, safeharboroh.com for that survey, and of course to set up a team or a meeting with Corey and his team. So thank you so much for being here.
Thank you.